China's economy may be struggling with slow growth, leading property developers to default on billions of debt and collapse. Still, one industry in the country has continued to grow and persist through all hardships. This industry is China's electric vehicle industry, and its growth made China the world's leader in EVs, with 64% of total production and 59% of global EV sales in 2022. One of China's biggest EV producers, BYD, is set to overtake America's Tesla as the global market leader in Q4 of this year and become the world's top seller of electric cars. This news comes after a year of price cuts started by Tesla in order to keep its market share in China, but customers still went to BYD, especially after the Chinese company also cut prices in response to Tesla's move. This raises an important question. Did Tesla start a war that it can't win? In order to answer this question, we're going to explore how BYD managed to pull this off and whether Tesla will be able to take back its EV crown or not. Finally, we will talk about BYD stock to see if it offers a good investment opportunity. Welcome back to PSD Markets. Not many people outside of China have heard of BYD, so it might surprise you that the Chinese automakers sold just 3,000 fewer EVs than Tesla in Q3 of this year, which sets BYD up to overtake Tesla's sales by the end of the year. In an interview for Bloomberg TV in 2011, Tesla's CEO Elon Musk laughed when the interviewer called BYD a Tesla competitor. Then he ridiculed the quality and looks of BYD's vehicles. If you look at BYD cars from that period, you'd probably agree with him. BYD started as a battery company, and its first hybrid car, which came out in 2008, wasn't well received by the market because the design was bad. However, in the decade that followed the release of BYD's hybrid car, production of EVs picked up as governments all around the world became more concerned with climate issues and global warming. China recognized this opportunity, and the government gave BYD subsidies worth billions of yuan in order to develop and sell an advanced and affordable electric vehicle. In order to fix the design issues that had Musk laughing in 2011, BYD hired designers from top European car brands like Audi, Mercedes, and Ferrari. This allowed BYD to have the complete package. Compared to Tesla, BYD's cars are much cheaper to make, making them much more affordable. The company also has the support of the CCP and the massive opportunities offered by China's vast EV market. This rapid development of BYD and its vehicles has caused Musk to take back what he said in 2011, saying in May of this year that BYD's cars are getting highly competitive. In addition to that, he praised China's EV manufacturing and the work ethic of Chinese EV companies in November. So how is BYD making this happen? For starters, BYD's vehicles are much cheaper than Tesla's. Tesla's cars are known for their technological advances and smart designs. Still, their premium price tags of between $40,000 and $100,000 make them inaccessible to a majority of customers, especially outside of the United States. In contrast, BYD is focused on affordability, which helped it win a wider range of customers and foster a new generation of EV users. The difference between the two companies' prices is actually drastic. For instance, the Seagull, which BYD launched at the Shanghai Auto Show this year, costs 73,000 yuan, or about $10,000, and is already the fourth best-selling EV in China. BYD's Song, Kin Plus, Dolphin, Yuan Plus, and Han models also feature in the top 10 best-selling EVs in the country. In fact, the only Tesla on the list is the Model Y. The rise of competition from local companies has forced Tesla to cut the prices of its best-selling vehicles in China in 2022, which has led to other EV companies doing the same, including BYD. This started price wars in the world's largest EV market as automakers struggled to preserve market share. Even though it was forced to cut prices, BYD still managed to record profits during the price wars. Its price cuts also weren't too extreme. In fact, a study that was released in December by the US-based equity research firm J.L. Warren Capital revealed that Tesla cut its prices for its EVs in China by more than BYD did for its flagship Han model. According to the study, Tesla reduced the price of its Model 3 by 6% compared to December of last year, and cut the price of its Model Y by 11% during the same period. In comparison, BYD's Han only saw a 5% price decrease during that time. What makes this interesting is that the Han vehicle is BYD's premium electric sedan and sells in a similar price range as Tesla's cars at above 200,000 yuan or $28,000, while most of BYD's other cars cost much less. The persisting price wars greatly impacted China's EV market, with BYD and Li Auto being the only two Chinese companies reporting profits so far this year. Aside from offering an affordable alternative to Tesla, BYD was helped by China's government, paying attention to building the world's largest charging infrastructure network. In 2021, the US had 112,900 public chargers deployed across the country. The whole of Europe had 442,000, and China alone had 1.15 million public chargers. In other words, it's certain to find a high-powered charger for your EV in China every 50 kilometers along major highways. This greatly eases the worries of taking long trips with EVs and encourages more people to buy an electric car. So it's no surprise that the sales of BYD's EVs didn't die out as soon as Beijing stopped giving the company subsidies in 2022. In that year, BYD sold 1,795,459 vehicles in China, while Tesla sold 555,740 cars. However, Tesla has the largest market share in the EV market in the US at 50%, and its position as the market leader in the US will remain safe in the years to come. This is because BYD currently has no presence in America besides its electric buses. It isn't likely to start selling its cars there anytime soon, especially since the Biden administration recently discussed raising the tariffs on Chinese-made EVs, which were already considered high at 25%. Discouraging many Chinese automakers from making inroads into the US market. In response to this, BYD shifted its North American focus to the Mexican market in early 2023, a strategic move from the company to avoid the US tariffs and establish a strong foothold in North America at the same time. Overall, it has been a good year for BYD, with the company reporting a net profit for Q3 totaling 10.41 billion yuan, or $1.42 billion, an 82.2% increase from the previous year. When looking at the first 3 quarters as a whole, we can see that BYD manufactured over 1 million EVs, trailing Tesla's production figures by a mere 23%. Also, the company's year-to-date profits have soared by an impressive 142% compared to the previous year, reaching over $3 billion. In addition to that, the company needs to sell 316,626 EVs in December to reach its 2023 target of selling 3 million electric vehicles, including plug-in hybrids. This goal won't be hard to achieve for BYD, as it sold 301,903 vehicles in November. While BYD's growth is impressive, and there's no denying that it'll surpass Tesla and become the global EV leader, will that last, or will it only be temporary, and Tesla will take its position back in the future? According to George Gianarikas, a managing director at Canaccord Genuity, Tesla doesn't have to sell the most EVs in order to win the EV wars. Gianarikas, a Tesla bull, compared Tesla's current position to Apple, which enjoyed a large market share because it was the first company to market a true smartphone before Asian competition from brands like Samsung and Xiaomi came into the smartphone market. It's the same for Tesla, which will be overtaken by the units sold perspective, but can still triumph in terms of profit. Gianarikas said that Tesla would win over time in the profit share battle, just like Apple, which doesn't have the most unit market share on smartphones, but it overwhelms the market in terms of profit share. In Q3, Tesla sold over 435,000 vehicles and saw a net profit of $1.85 billion. While this is so much better than other EV companies, it was still a 43.7% decrease from last year's net profit in the same period of $3.29 billion. This is possible thanks to the price cuts, which saw Tesla posting a profit margin of 17.9% in Q3 compared to 25.1% a year ago. Despite this, Gianarikas believes Tesla has a strategy to get the company back on track. He believes that Tesla can make up for its declining profit margins by selling a lot of full self-driving FSD software to people who already own Tesla vehicles. In the same way, Apple protected its profits by selling different services to Apple users. This adds to Tesla's reputation as more of a tech company rather than a car company, especially as it invests in AI-powered robots. To sum this up, Tesla will most likely enjoy its position as the US market leader for a long time, even if it loses market share to BYD globally and in China. Additionally, Tesla is often promoted as a tech rather than a car company, allowing it to keep its valuation and brand intact despite competition from other EV companies. Additionally, BYD is expanding its presence in Mexico and also in Europe, with the company recently announcing that it's establishing its first factory in Europe in Hungary, which will give it a competitive edge in the European market. As for its position in Asia, Thailand has become a big market for BYD, but it has entered many Asian countries, including Japan, India, Malaysia, Singapore, and more. The same arguments could be used for buying BYD stock, especially since it's currently down by nearly 30% from its 2023 peak. However, being a Chinese company, BYD is risky because it faces substantial political and geopolitical risks. Political risks include the strict regulatory landscape of China, while geopolitical risks include the tensions between China and the US, which have led to several technological bans. So, BYD stock might be a good investment for risk-tolerant investors who want a stake in China's large and growing EV market. If you're interested in BYD stock, you might want to allocate only a small part of your portfolio, depending on your risk tolerance. Well, that is everything for now. What do you think? Is BYDDF stock a good investment right now? Please let us know what you think in the comments below. And if you haven't, please subscribe and leave a like for this video. Your support helps us continue our work. Thanks again for your support, and I will see you in the next one.